Hi, everybody. Scott Riley, the Market Update Desk, July 19th. We've got a little bit of a wacky day starting off. If you haven't followed the news or gotten any alerts, there's a global IT issue going on today between Microsoft and Crowdstrike that's causing, a lot of dilemmas out there from airline flights being canceled, financials not being able to utilize some ATMs. And for us, some of the software we use is down. So if you're dealing with a mortgage lender, your realtor, financial stuff today, airports, please take a breath. It's not their fault. Try to be patient. There's a lot going on between Microsoft and CrowdStrike trying to fix that patch. There's no ETA on it, but it just shows how interconnected everything is in our technology-based world today. I wanted to do, kind of a little bit of information on unemployment. We've talked about it a lot. We've shown that unemployment claims are rising nationwide, but we did a little bit more of a deep dive. When breaking it down per state, 24 or almost half of the states in the country are higher year over year for unemployment claims. And additionally, 47% of the population of the country live in those 24 states. Now compare that July reading with June, where there were only 11 states that housed 22% of the population that had higher year over year claim figures. It means that we're seeing this shift in the labor market we've been talking about. And this unemployment challenge, this new job seeking, trying to get a new job and retain it, is starting to expand nationwide. Another item out today were the LEI, leading economic indicators. Now that showed a decrease in June up by 0.2%, which was slightly better than the -3 that was expected. Now, keep in mind the index has been negative for 26 of the last 27 months, and the only month that it wasn't negative, it was flat. Now, the LAI is also predicting that economic activity is kind of like we've talked about, likely going to continue to slow and lose momentum as we move forward into the year. And they expect the US GDP growth to fall to about 1% in Q3 of this year. So those are very important things to keep following as we've talked about: economic growth, unemployment, jobs numbers. These are these three big pillars that are weighing on decisions for the Fed and also the bond market and mortgage-backed securities. So very important things to follow. Next week, we've got the start of a really busy and I think positive week. Tuesday, we get existing home sales. Wednesday, mortgage applications, which are probably likely going to show another uptick because rates are starting to come down. You have more competition entering the market. Also, new home sales on Wednesday. Thursday, we get a whole bunch durable goods orders, Q2 GDP second reading, and initial jobless claims. Friday, we get a big one in the PCE report, personal consumption expenditure. Fed's going to look at that very closely. Now, keep in mind the Fed's going to meet on the 31st. They're going to look at this PCE report, and they're also going to look at the quarterly census on earnings and wages, QEWC. That comes out the day before the Fed meets, and that's going to, what we talked about, show a big revision or downward contraction of jobs compared to what the BLS showed. So probably anywhere in the neighborhood of 500,000 fewer jobs in Q4 of last year than what the BLS reported. So that's what's going on today. We hope you have an awesome afternoon. We're going to be busy this weekend helping people get pre-approved and using our contacts and relationships to help their offers get accepted. Have a wonderful weekend. Scott Riley, the Market Update Desk, your singular original market news source for the Western Michigan area. Have an awesome day.